so today we want to analyze a simple strategy because I was looking for another one to add to the list of the ones that we already added for diversifying the strategies. Alright, so let's go. This one's fair value gap. So it happens when you have a big candle with a big drop or big raise in the price. And the gap is defined by the low of the previous candle, as you see here in the green one, and the high of the next one for the bearish, and for the bullish one it will be the opposite. So here you see the gap. This is what we have, and the theory is that the price will usually come back to the gap and then continue the previous trend. So it means that when you drop here at this point in the beginning of this candle, you can detect the gap, and then you can guess that the price will go back inside this and then continue going down. This is the theory, and normally the reference for the stop loss is the high of this one or the low of the previous one in the bullish gap, and we want to put it a bit higher. I just have some examples here just to see different gaps that we can see and what are the parameters that we need to detect good ones for us. So this one, you see the price comes back in this range to the middle of the gap, and then perhaps here your order will open and then it will go towards your profit. But you have another one here. This is a small gap here in this case, and this is an unsuccessful because the price at this moment comes back in the range and then continues. It doesn't go back to the profit. So this is a losing one. This gap here is a winning one. This one is a winning gap. As you can see in the continuation here, the price touches the middle but doesn't go to the stop loss. Same for this, and then goes to a fair amount of profit. This one again here is losing. This one's winning. So it's not a strategy that can make you money just easily by finding the gaps. Here you see another one which is losing, another one that's winning. So one thing that I think can help us detect good ones is the RSI, and if I open it here, for example here, or let's take this one. This gap is a bearish one. It means that you need to put a sell order somewhere in the middle of this gap, and pending order in fact. But you see here your RSI is below 30%, which means that the market is already oversold. So it doesn't make sense to put a sell order at this moment. But at this moment here, okay, it's not at least overbought, so it makes sense to buy. Another parameter that we can study is the size of the gap. So you see this one is really big. You can be sure that with this case, the price for sure will come back to the range. But with the small ones, you're not always sure, and also sometimes you have a big delay between the gap itself occurring and then when the price comes back, maybe in this moment, to the range to open your order. So by that time maybe the trend has reversed or many things could happen, so maybe you want to expire your order before that moment. Alright, let's see how we code this strategy. So here we have the code. I've already done it. We have some parameters like the gap target, which means at which point of the gap you want to open your order. In the middle, in the top of it, in the bottom of it. Then you have the minimum and maximum size of the candle for the gap. Then you have the gap itself. Then the stop loss margin that you want to put between your real stop loss here and the top of the previous candles. After that, you want to always limit your stop loss by some value. You don't want to go very high. And for take profit, I chose a big value because I'm trading. In fact, there is no straightforward rule for the take profit here. I also added a parameter called RSI check, which you can activate and deactivate. checking RSI level for overbought and oversold markets, and use it to avoid entering when the market is not in a good situation. Then we can also choose to only take the long ones or the short ones, so we can filter them. The minimum trade is a parameter for the trade function, and maximum orders, which is for now at least to one. I don't want to open two orders at the same time. And here the expiry means after how many candles we are going to cancel the order if it hasn't opened yet. And compounding, which I deactivated here. Here you have the code which detects the bullish gaps and the bearish gaps. Then if the RSI check is active, it will also check some levels for the RSI. And here we've set the orders. So I've already coded this one and tried to optimize it. So for optimizing a strategy, you can do it here. I check the ones that I want to change and see the impact. So the max orders, I put it always to 1, it's deactivated. The compounding also, I want it to be deactivated right now. Then we have some starting point steps and the stopping point for varying all these parameters. And as I did before, I want to do a cheat training here between 2020 and 2023. You can check the previous results in the previous post. I will link it in this post too. So to do that, you can check optimize and run it. You will start to see results here. And one important factor is this optimization graph, because this one shows us if our strategy is capable of being optimized or not. We'll see in a moment. Here you have a summary of the test cases that have been run, and we want to find a good one which has good profit factor, payoff, and low drawdown at the same time. Alright, so I stopped the recording because it would take some time to finish the optimization, but now you see the trend and you see that this strategy is capable of being optimized. You see in the beginning the outcome here, which is a balance after 3 years, was around this point, but then as we go forward in time, you see that it's increasing and then it saturates at some point, and the software stopped at this moment because it realized that it's not optimizing anymore. And it makes sense because during a certain period of time, there are so many entry points, you cannot generate more entry points by changing the parameters of your strategy. So now here you have all the profitable cases. You can try to look and find good ones. What I will do here, just let's check one of them. So I chose that one, and now we can see the results here. This is the performance over time, and here you have the outcome. So we have 1.5k profit in 3 years, and the initial deposit is not important here. I still consider $100 investment with 100x leverage. Of course, with this maximal drawdown, you need to put more than 100 in your pocket. But for each trade or at each moment, you will not have more than 100 euros invested. Then you see the success rate is more than 50%, and the profit and loss per trade is almost equal, which is not that good. The profit factor of 1.5. What I will do is to copy everything here, come to Excel, then I add filtering function here, and in this column let's put profit divided by maximal drawdown. Good. So for 3 years I don't want to have more than like 60 trades. then I don't want to have more than $200 of drawdown. And now let's sort everything based on this ratio here. So these are very stupid ones, but we have good ones here, like 500 profit with $90 drawdown, which seems good. The rest are in the same range. So this one is 672. Let's come back here and go find it. $672. So this is the graph for the balance with this strategy. Of course, it's cheat training. It's optimized only for this period. And you see we're getting $500 of profit with the maximal drawdown of $95, and the absolute drawdown is around 76. So still good. Our success rate is 70%, and the profit, average profit is 63 divided almost twice or more than the last. So it's very good performance. Alright, so I've already done this for the same period, 2009 to 2014, as the other strategies, and saved already this one, the optimized case. This is one of the best cases it could do. You still have big drop downs in these two regions, also moderate ones in this case. Then here is flat. So in long term, it's not possible to optimize this strategy, at least alone, for having good profit. But still here you have the drawdown of 400 and the profit of 2,500 and the profit factor of almost 2. So still it's a good strategy for me if you want to mix it with the other ones. And the success rate of 60% with the profit which is a bit higher than the loss. So I have already added this strategy to the other ones. We have a new expert here which has 4 strategies inside, trading at the same time. And then I've also optimized it and put the settings for the period of 2000 to 2022. We already have the previous one, which is here. Okay, it's not easy to compare the graphs, but with the reports we can do it. So before we had this column, which is around $6,000 of profit and around $600 of maximal drawdown, which gives us the ratio of 10%, 10 times here. But in this case, we have 8,400 compared to 640, which is better than the other one. Still, the profit factor is almost the same. Then the success rate 55, 56, still the same. Then the profit is 38, 36. Here it was a better difference perhaps, or maybe not. And the rest is not that different. The only thing is that the amount of profit divided by maximal drawdown has improved. Okay, I will continue the points that I have made in the previous post, and then when I have good results, I will post